Hello, guys. Welcome, Santosh. Welcome, Arik. Just gonna give everyone a few minutes to jump on board. Super proud to see that there's people here, considering that it's Easter weekend. Let's just wait and see who the committed ones. Just give us a thumbs up in the comment section, guys. Just give us a thumbs up in the comment section. Lovely. I love to see it, guys. Hi, Guru Deep Singh. Hi, Anil. So proud to see that there's people here today. I'm so proud to see that there's people here today, considering that this weekend is our Easter weekend. Hi, Tamsanga. Hi, Renelwe. Good to see you guys. Please, guys, notify me if you've been part of the webinars, webinar 1, 2, and 3. If you are with us from the beginning of the course, please just give us a thumbs up. Please notify us. Hi, Ajil. Hi, Salu. Good evening, everyone. I'm here to learn. It is my first session. Hi, Salu. How are you doing? So happy to see you. Please, guys, everyone that is here for their first session, make it a point that after this session, you go to the same, obviously, where channel OctaFX and go to the lives and then go and check for webinar 1, 2, and 3 so you can keep up with us. Okay. All right. Hi, it's Keo. Hi, Kamar. Hi, Tando Gaba. Hi, Kurt Damons. Lovely to see it, guys. Hi, Livwani. Lovely to see it, guys. Please give us. Oh, and I can see Tando was here from webinar 1. I've been part of it since day 1. This is lovely stuff to hear, guys. This is lovely stuff to hear, but also it's not too late. Anyone that is just joining us for the first time today, please join us by starting from webinar 1. Check out webinar 2 and 3, taking down notes and really learning. This is an opportunity for us, to learn and get some good education free of charge. All right. So, with that said, I hope you guys have your pens and papers at hand because we're going to be consolidating everything that we have been learning since webinar 1. All right. So those that have been talking about placing positions, we're going to be trading live today. We're going to be looking at charts live today. So if you're excited, just give me a fire emoji. Give me a fire emoji in the comments if you're excited to see how we as traders execute the market, how we as traders look and the steps that we take as we execute the markets. Just give me some fire emojis, or give me a thumbs up, or give me a thumbs up, or hit the like button. Good evening, Kingfisher. How's it, Ian? Good to see you, brother. Good to see you. Pilile, good to see you guys. Good to see you. I love it, guys. All right, so we're going to get started. So welcome to webinar 4, the live trading session with myself, Prince Mkokeli Mampofu. And this webinar is brought to you by our lovely broker, OctaFX. Okay. So before we get started, I'm just going to put out a disclaimer. Any opinions, news, research, analysis, or information discussed on this webinar or linked to this presentation is regarded as general market commentary and does not constitute as financial investment advice. Okay, guys. So we're going to be covering some good content today. I hope you guys are excited. So the steps that we're going to be covering obviously start with market analysis, which is part of the content that we're going to be covering today. And then I'm going to be giving you guys some tips and tricks on how to smash the markets, and then how to open and close a trade in real time, guys. So at the end of it, we're going to be having a question answer session where you guys are going to be able to ask me any questions pertaining to what we've been discussing in our trading session and the previous webinars. All right. So we're going to be covering a few steps. So obviously step number one will be checking fundamentals. And then step number two will be identifying market structure. So we did touch on that a bit on webinar 3 and 2. And then identifying key levels, which we spoke about yesterday. And then we're going to be looking at confluences. So when I say confluences, that we're going to be putting everything together from candlestick structures that we're going to be looking for, moving averages, support and resistance, trend lines that are going to be there to support our analysis, all right, and to give us a strong I would say bias on whether the market is going to the upside or to the downside, all right? And then we're going to be talking about how to find entries and exits, all right? And then we're going to be talking risk management, of course, which is a major part of what we do, all right, as traders. So step number one, we check fundamentals for that day, which is part of news analysis. So we see when to trade and when not to trade based on the news that is released on that day, based on what type of news that we are looking at, if it's high, medium, or low volatility news. All right. If it's the currency is strong or weak, we can see using these different news releases and news reports. All right. So we're going to be going through that step by step. So obviously we can check our news releases on www.OctaFX.com. So I'll be going through it with you guys. Right. Let me just open the page. So we've got www.OctaFX.com. All right. So once you have opened up this this page and it comes up, you go to analysis and education. All right. Once you're under analysis and education, you will then find Forex news. And then once you're on Forex news, you can then go scroll down here and see some of the news reports or some of the major news releases for the day. Okay. But specifically, if you want to know what will be coming up for that day in terms of news releases, you go to economic calendar. And then obviously, as we explained yesterday, you can go to your time zone based on where you stay. This is our time zone, and today is the day that we obviously want to see. And then obviously we scroll down, all right? And then it breaks it down, obviously starting with Asian session at the top, or from 1 a.m. as you can see there, or 11 p.m. yesterday. And then we start our London session news, which is around 8 a.m. to around 2:30, and then from 2:30, or in this case 1:30 today, we have our New York session news. All right. So based on the strength of or the impact of the news, you can see on your right over here we've got low, medium, high. If you're the type of trader that trades on less volatile market conditions, you'd obviously, if the market is highly volatile, for example, we had a high news release. That was the unemployment rate for Canada. And then obviously you would avoid trading for that particular day. All right. So obviously, if you want to get more details on each news release, you'd just click on the it's not clicking open. Okay, usually you just click on the news that you want to get more details on, and then the tab usually comes down, and then you can get into more details on the news releases. All right. So as you can see, it shows you the previous report, and it shows you the actual report and the forecast of what they are speculating is going to be the outcome of that news release. Okay, so please use this to your advantage. There are obviously other news platforms that you can use to get more details, such as Bloomberg or Forex Factory. You can take advantage of all those. All right. All right. Identifying market structure. All right. So when we're talking about market structure and we talk about market analysis, a very important part of it is what we call backtesting, which is what I'm going to be teaching you guys to do. Backtesting helps you to identify certain patterns that assist you as a trader to in placing a buy or a sell trade. Uh, Backtesting also helps you to kind of make sense of a strategy and say, okay, this is a strategy that I feel I can use or I feel I can't use based on testing it out on maybe a demo account or even on a live account, but just playing around a bit with the live chart. All right. So backtesting. So we look for market patterns that signal a buy or a sell pattern or reversal in the market. All right. So there are two types of market patterns that we look for. We look for continuation patterns and we look for reversal patterns. We spoke about these yesterday, guys. So if you can recall, yesterday we spoke about some reversal candlestick structures, which the inverse head and shoulder was one of them. If you can remember that, if you can remember the structure from yesterday, give me a thumbs up. Guru Deep, yes, we are going to be doing some live trading. Just be a bit patient, we will get there. All right, so the inverse head and shoulder is when the market is moving to the downside and then eventually creates a structure such as so. All right, where the market creates a shoulder, a left shoulder, and creates a head and a right shoulder, and then continues to the upside. All right, this was the structure that shows us that the market is bullish. This is a bullish market structure. All right, and then we have another example, which was a double bottom. Remember, we spoke about a double bottom yesterday, where the market touches the low of a certain price area twice and then reverses when the market momentum was initially moving to the downside. So, for example, when the market was moving from the upside to the downside and then eventually reaches a certain level and then rejects or finds a support and moves to the upside and then tries to go down again and then finds a support once again and then goes up. This is what we call a double bottom. This is also a pattern that you can look for that can indicate that the market is ready to make its upward move. Okay. So I'm going to be touching on a few of these on a live chart. Some of these patterns. Okay. So if you guys remember, yesterday we did talk about a couple of patterns, all right? Or a couple of structures that help us see that, okay, that the market is ready to make its downward move, right? So I've marked a couple of price areas and indicated a couple of patterns that we can look for, or how to identify these different patterns on a live chart, guys. All right. So firstly here, I've marked an area of sensitivity, which is a key area of resistance. All right. As you can see, the market was clearly moving to the upside. And then eventually, when it got to this price area, 1,00143, then our market began to reverse, all right, and started moving towards the bearish side. All right, the market went up again, and once again, when the price got to this 1,00258 area, it reversed once more. So what does this tell us? It tells us that we have got a key area here of resistance. So what do? We mark this area. All right, this is what we call a trend line. We've got different types of trend lines. I'll be using a horizontal trend line to mark this area here. Why do we mark it? Because clearly there is what we call a repetition of in price here, rejecting at this particular price area. All right. So one price rejects it twice. We've clearly got a nice double bottom area structure here. But what does it do? It does this for a third time. And what do we call this? We call this a triple top, if you can remember, guys. Okay, if you can remember from yesterday, this is what we call a triple top structure. It's when the market has touched a certain resistance area more than once, twice, but 3 times. All right. And on the third time, it creates an M structure. All right. So now I'm going to be talking to you guys a bit later about the importance of key areas such as resistance areas and pertaining to these structures. All right. So it's important that when we look for these M structures, these W structures, when we look for these triple tops, when we look for these inverse patterns, we look for them at critical areas where we feel like the market is resisting. All right. So the reason why we do this, why we look for these structures, is so we know what the general direction of the market is. All right. So we've got a triple top pattern. What does this mean? This means that obviously after the market breaks out of this low, we are clearly going to have a long-term sell move to the downside because we've got a triple top pattern that has formed. All right. So what I'm going to talk to you guys about also more in details is time frames. All right. So obviously when we look at these structures, especially when we are planning on swinging trades in the long term, we'll open up our charts on higher time frames. All right. So for example, this chart is opened on the daily to give us a more broad perspective of what the market is doing. So this you can go down to 4 hour, 3 hour, 2 hour, 1 hour, all the way down to 1 minute. All right. These structures still apply on all these different time frames, but this is just for your more long-term traders such as swing traders. Okay, guys. So we've got a key area of resistance here, as I had mentioned, and I showed you on our example here. When we look for these patterns, guys, we look for them at these pertaining areas or these key areas. All right. So we've got a 1, 2, 3, even we could even call this 4 touches to the high, where the market has failed to break that high. So what does this signify to us? That the market is ready to move to the downside. And what did it do? On this third touch, it created an M structure. If you guys can see this over here. We've got a nice M structure here. Please, guys, can you see this M structure here that is formed? This M structure, if you can remember, is a bearish structure. So what do we do? As mentioned, we wait for the breakout on that low, and once we get a breakout, we get our sell off. Boys, I'm busy. And once we get a breakout, we can then place our trade to the downside. All right. Okay. Sorry about that. It's the perks of having children. Okay. So the next point, we'll be talking about identifying key levels. All right. This is trend lines and key support and resistance areas. All right. So we've got an example, like I had mentioned yesterday, where we've got our resistance trend line and then we've got our support trend line. All right. What does this show us? It shows us that the market is moving in a certain pattern towards a certain direction. For example, here we can see that the market is moving in an uptrend. As you can see, the candles are forming majority green and are moving to the upside. And as they move, they consolidate in between this trend area, chopping up and down. All right. Chopping up and down and consolidating sideways. So eventually we would wait for the breakout to the upside, and then that would confirm our buy trade. All right. Let me just I think I've got an illustration for you guys here. All right, so this is just another example of a descending channel as marked. So this is when the market is moving to the downside. So we use our trend lines to mark the resistance areas and the support areas. So as these trends move down, as this trend moves down in this sort of a pattern, you can see that it's creating a support area as it's moving down and descending, and it's also creating a resistance area as it is descending. All right. So as you can see, we've got a clear resistance area here, and as the market rejects at this resistance area, it moves to the downside and finds a support and then consolidates and moves to the upside and then goes down once more and consolidates and moves to the upside and continues to the downside again and then chops and consolidates to the upside and goes down again. All right. So this is what we call, as I mentioned here, our resistance and support. These are the trend lines that we use. These are what we call our horizontal trend lines, or I mean diagonal trend lines. Okay, this is what we call our diagonal trend lines. And as you can see here, we've got our descending channel, which I've marked it here for you guys. So if you guys want to make an example of this illustration, you can just make that example, right? Or you can just draw it mildly on a piece of paper and just draw the two lines and just mark it descending channel and mark this trend line as resistance trend line and this trend line as a support trend line. All right. So now the question is, how do we take advantage of these trends? We take advantage of these trends by waiting for the structures. Remember, in the previous webinar, we spoke about different what you call different patterns that we can look for, not reversal patterns, but continuation patterns. Our continuation patterns, I believe there is an analogy here, or it was on another webinar. Okay, that's fine. So we've got our continuation patterns. So as the market moves to the downside, it creates a chopping movement to the side, and which is what we call a reversal. And as the market reverses, it creates this structure, which is called a pennant, all right, a bearish pennant, all right. So as the structure forms, we then wait for the market to break out of this bearish pennant structure, and then once it breaks out, we wait for the retest, as mentioned, as we spoke about yesterday, and then we enter the sell, right? So let me just go tight on this. So as the market consolidates and chops sideways, what do? We create a trend line to the upside, and then we create another trend line to the downside, which is a support trend line, and we create a resistance trend line to show us that the market is consolidating, right? And then once the market breaks its consolidation, we then wait for the market to retest and then enter upon the sell opportunity below this bearish candlestick, right? And as you can see, the market did inevitably move to the downside. All right. Is it everything making sense, guys? Is everything making sense? It's called the bearish pennant. Let me write it down for you guys. But you can find it, some of these patterns on uh, the webinar. I think it was webinar 2 when we covered these different continuation patterns. All right, and then obviously you place a sell after the breakout. All right. So obviously, as I mentioned, the market is moving on a downward momentum. In the process of the market moving and continuing down, we then wait for the pullback or the consolidation or the reversal. While the market is reversing, it creates different structures that we can look for. You'll find them on the webinar 2. This in this analogy is what we call the bearish pennant. We then wait for the breakout of this pennant, and once the breakout occurs, you can then wait for the market to retest. Once it's retested fully and rejected against that support trend line, we then place a pending order below the bearish candlestick. Okay, and as you can see, the market indeed did fall, all right, to the downside. All right, I hope everyone is understanding me. I hope everyone is understanding me, guys. All right, I hope everyone is understanding me. Okay. Okay, the next example that I'm going to be showing you guys is what we call the horizontal trend lines. All right, so this is obviously what we spoke about yesterday as well. It's a different type of trend line. Instead of the diagonal that I showed you previously, this is the diagonal, horizontal trend line. All right, I think I have got an example here. All right, so now the question is, how do you identify these areas of sensitivity or these support and resistance areas? We look at where the market rejected. We go back in our price history, then we see where the market rejected. All right. So for example, we can see here that at area 1,24548, that there is a key support area. And then once we've identified that, by the fact that the market keeps coming back to this area and rejecting or finding support, for example, it found support once, twice. In the history of this price, it probably couldn't found it even more. Once, twice, three times, four times. It clearly shows that there is a sensitivity in this area. All right, so we then mark that area as an area of support or area of sensitivity, and the same applies here at 1,27407. We mark that as an area of sensitivity, and 1,30598, and all these different areas. As we can see that the market, when it gets to these areas, it rejects or behaves in a certain way. All right, so area of sensitivity at 1,38642, because the price was moving to the upside and found the resistance at that area, came down, and then once again found resistance. And as you can see, ours is creating sort of a resistance structure, all right, or what we call a bearish structure, a double top, if I'm not mistaken. So as you can see, our market here is giving us a nice double top structure here. So for a long-term trade, ideally what we would do is to wait for the market to break out of this area here, of this neck area here. Or what we could do is wait for a more refined entry and place a sell and have our target at the neck area. Hi, Kama. Yes, this is a live and it is recorded, so you'll be able to find all this content. All right. Okay. So this is how we mark these resistance and support areas. We look and see where the market um, has rejected and found support more than once, twice, or even three times. And then we can officially mark that area as an area of sensitivity. As you can see, the market is moving live now and is looking to kind of give us a rejection at this area. So that could signify that the market could potentially continue to the downside. But obviously, we would have to see what the market gives us. If the market closes on a reversal candlestick on this daily chart, and then we would be able to say officially that we can enter for the continuation of the sell move. Or if the market would break out of this trend line area here, we would then be able to say that the market could give us a sell move to the downside all the way to our target area at 1,32326 at our neck area. Okay. All right. Okay, so now we're going to be talking to you. I'm going to be talking to you guys about putting everything together. All right. So when I say putting everything together, it is putting our confluences together, which is our market trend or structure, which is going to show us that the market is either going to the upside or going to the downside. And then we look for our finding our key areas of support and resistance, which is through our trend lines, using our support and resistance levels like I just showed you now, and then finding our bullish and bearish patterns. All right, and then obviously moving averages and entries and exits. All right, so let's go to our live chart. All right. Okay, guys, so please take advantage of this. We are talking about USD Chef. We are analyzing USD Chef, which is the United States dollar against the Swiss chef. Okay, so remember I spoke to you guys about confluences. So the first piece of the puzzle is our structure. So what is our structure? Our structure is the triple top, which signifies a resistance level, a key resistance level. All right, so the market touched this resistance once, twice, three times. And on the third time, we can then say, okay, we are ready for the sell move to the downside. All right, at this key area at 1,00198. All right, so obviously, guys, this is back testing. This is me just showing you how I look at this market, kind of identify when to place a buy or a sell. All right, so confluence number one is that we've got our market structure, we've got our triple top, and then secondly, we've got a secondary structure here, which is on a our M structure, all right, which is our M structure. And if you can see, our market is moving up and creates sort of an M formation here. And then on the break of this neck area of this M structure, we would then safely say that we can look for sell opportunities. All right. So if we take this down to the 4-hour, I believe we're gonna have to look for that structure now. If you guys can remember, on the daily chart, we had an M structure, right? Or a double top, all right? Once the market broke below our M structure, let me try tighten this up a little bit more for you guys, so you guys can see properly. Once the market did officially break below this M structure here with a full candle, remember that I told you that once we get our breakout, what do? We wait for the retest of the resistance area or the previous resistance turned support. Okay, once we get our retest candle that is formed, we then place our sell order below, all right, the breakout candle. All right, so when the market does eventually come back down and respects our resistance area there, it triggers us and moves down with us as the market moves bearish. All right, so this is what we would do here. We'll place a pending order there at that level 0,981,97. All right, and remember, we spoke about having a healthy risk to reward ratio. We would then place our stop loss above the previous high, all right, or above the previous resistance area or support resistance area here at 0,99378. And then we would look to see if we could find a target area which is our next support area where the market is finding support. And clearly we've got a support area here. Don't worry guys, I'll expand this a little bit more so you guys can see exactly what I'm trying to explain. And then we'll place, excuse me, sorry. All right, let me take it back up to the daily chart so you guys can see this properly. So remember guys, initially what made us take this opportunity was the fact that there was a triple top structure. Okay, so once we had our triple top structure, we then have a key resistance area which was confluence number 2, and then we have our M structure that is forming. All right, once our M structure that forms, what do we do? We then look for our entry. So where do we find our entry? Remember, once we have found our M structure that has formed, we then wait for a breakout, a retest, and then we can then enter, and then we've got a nice 1-to-2 risk to reward ratio trade, and that is then how we execute our trade. All right, so on the another confluence, part of our confluence, if you're looking for another confirmation that will give you a strong bias for a sell, is the fact that after our triple top structure formed, we also had a strong bearish engulfing candlestick. Okay, remember that we spoke about the bearish engulfing and bullish engulfing, which are candlesticks that speak to reversals. All right, so this is a strong bearish engulfing candlestick, which also confirms our sell momentum. All right, and that the market is ready to make its move to the downside. Are there any questions, guys? I hope I'm not moving too fast and you guys understand everything that I'm explaining. So when we speak about a confluence, we are talking about 1, 2, 3, 4, or even 5 different indicators of a sell in a market or a buy in a market. All right. So as I mentioned, we've got confluence number 1, which is our triple top, the market touching this area of resistance once, twice, 3 times. All right. And then we have our double top, all right, which is our third confluence after this resistance area. And then we've got our bearish engulfing, which is our fourth confluence, which indicates a strong sell momentum. These are all indicators of the market saying the market is going to go down. And indeed, after all those confluences, the market did go down. All right, do you have any questions, guys? Do we have any questions? No questions, guys. So everyone understands, please give me a thumbs up, guys. Please give me a thumbs up. I know sometimes I can speak a bit fast and I can be a bit confusing. Is everyone okay for me to continue? Okay, an entry strategy. All right, all right, cool. Technical student. Okay, Alusani is thumbs up. So, an entry strategy, technical student. As I had mentioned, okay, what we are looking for here is a safe entry, guys. All right. So the reason why we take all these precautions is because we want to make sure that the trades that we take are high probability trades. All right. What does that mean? Okay. So, so I will answer you shortly, 666. Thank you for that question. I will get to it shortly. So the reason why we take all these precautions are because we want to make sure that the trades that we take are high probability, even if it takes a long time for all these confluences to come together. But it should be a scenario that when they do come together, we know that out of three trades that we take that have all these confluences, two of them will definitely be a win. All right. Sing, just be patient. We will get to the live trading. We are just for the moment helping everyone just make sense of what we'll be doing on the chart. All right, so we can all move together. All right. So as I had mentioned, for a technical student, after the structure has formed, right, which is the bearish structure, for in this example, the M structure has formed, we then wait for the breakout candle to form. All right. So once the breakout candle has formed and closed, for example, here on the daily chart, we can then go down to the 4-hour chart. Sorry, guys. Right, as you can see on the 4-hour chart, it becomes more clear, and then we have our breakout candle there. All right. Once our breakout candle has formed fully below our breakout area, our breakout area is the area where we had our neckline. All right. Once the candle fully closes below there, we wait then for a full retest of that area. In other words, of that previous breakout area or the previous support area. Once the price is retested, we can then safely place a pending order below the breakout candle. Right? When I say a pending order, I mean like a sell stop. All right. So once we place a sell stop below this area, on this below this breakout candle, when price continues to move to the downside, it triggers our order and moves down with us as the momentum of the market moves down. Because remember, the market has come back to retest that area. If it didn't respect that area of resistance, it would have continued to the upside. But if it does move down and trigger the order, that means it respected that area of resistance, and the momentum now is ready to move to the downside. So please, technical students, if you're understanding me, just give me a thumbs up. Or if you need a clear explanation, um, please say something. So once we placed a sell stop, and then the market triggers that order, and then obviously we have our stop losses and take profits in position before we've even executed the trade. I hope that's making sense, technical student. Okay, Zama says thumbs up. Ian says fire emojis. Okay, lovely. Okay, let's continue with our presentation. Okay, 666 says thumbs up. All right. Okay, cool. All right. So obviously we can use our moving averages as well to also confirm these orders. Obviously, we did touch on them a bit yesterday. Okay, these are just some examples of what I already mentioned. All right, and candlestick formations as well. So I just want to show you guys a few more examples that of some opportunities that I was looking at this week. Just also to touch on the support and resistance a little bit more. As you can see, and so one of you guys asked about breakouts. Okay, so if you can look before January 10th, you can see that the market was moving to the downside, all right, all the way up from price level 13750. And as price was moving to the downside, okay, eventually we had a full and clear breakout of this price area, which was a strong support area that hadn't been broken since before the 8th of June. Okay, so eventually price did break out of this support area, and once it did, it still hasn't broken above that area since then until I believe the 3rd of April. So a breakout is when price is moving either from the upside, right, and breaks a certain area of sensitivity, all right, or a certain zone that hasn't been broken in a certain amount of time. For example, after the price did eventually break out of this area, it continued to the downside, all the way down to price level 1,18184, and then obviously consolidated and kept on chopping up and down until it eventually broke that support area on the 26th of August. Okay, so once we do get an official breakout, so a breakout is when a candlestick forms and closes above that price area. Okay, guys, so that is a breakout. So when a candlestick closes below that area, right, and the candlestick closes. So remember yesterday we spoke about the open and the closing of candlesticks. So that's what a breakout is. I hope I answered. Um, I can't remember who asked the question, but yeah, that's what a breakout is, guys. All right. So just remember these terms that I explained to you guys. So just a reminder, support is when price is moving from the upside to the downside and resists to break a certain area of price or in price and continues to the upside. The support area is that strong zone that price finds resistance in. All right. And resistance is when price is moving to the upside, but eventually fails to break the upside and then tries once more and fails to break that upside. Clearly, there is a roof or a strong resistance above in that area. All right. So resistance is when the market is failing to break a certain area in price to the upside. All right. So there's horizontal trend lines that we use to mark these support and resistance areas. And then there are diagonal trend lines that we use to mark these areas of resistance. Okay, so We'll be talking about opening and closing orders. All right, so opening and closing orders is when you open a position. When you open a position, you buy a currency pair when the exchange rate should increase, or you sell it. All right, when you're expecting the price to fall. So closing a position is the reverse operation. You sell what was previously bought or buy out what was previously sold at a new market price. All right. So there's different market executions. We've got our buy limits, our sell limits, our sell, our buy stop, and our sell stop. Okay. So this is obviously a live chart. I think we're looking at Euro USD. And as you can see, I've marked my areas of sensitivity. I've marked my support. I've marked my resistance areas. And obviously, once we have marked these areas in price and we have done our due diligence in terms of analyzing whether the market is going for a buy or a sell, we're then ready to execute the market and place a trade. All right, so there are a couple of ways that you can then place a trade. You can place click on new order, or you can click on sell or buy directly on the sell or buy tabs. All right. Okay, let me just go back here. And once you do click on the new order tab, you will then get your sell by market or buy by market, which you can then execute your trade by placing a sell or triggering directly a sell or triggering directly a buy. All right. And that is market execution. All right. And then there's obviously your pending order options. I don't know why it is not clicking. Okay, so you can then either click on your right click on your mouse and then go to trading, and then you can click on either buy limit or sell limit. All right, and then by clicking on buy limit or sell limit at the area of price that you want to place your buy or sell stop, you can then place your pending orders. All right, so this is how you place your pending orders. If you want to place your market execution, you can then place sell or buy on the sell or buy tab. All right. How do you determine a false breakout? Okay, that's a good question. I love that question. So a false breakout, you can determine it by when you see the market close below a certain area in price. All right, so for example, we've got our support area here, and when our market moves and closes below this area, but instead of continuing to the downside, remember we said that before you place your sell trade, you wait for the market to retest the trend line, right? Once the market retests the trend line, you can then safely place a sell stop or a buy stop. So the reason why most people get triggered or get in trouble when it comes to false breakouts is because they don't wait for the retest. Once you get the retest, you can then place a sell stop or a buy stop below the area where the market closed below. So for example, we've got our close on this candlestick here, and then we've got our next candle, but obviously we have to wait for the full retest. Once we get our full retest, on the of our horizontal trend line there, we can then place the sell stop below. And then after we've placed our sell stop below, and then we then wait for the market to then trigger us and continue down to the downside with us. Does that make sense, Guru Deep? Hi, Daily Show 2.0. I think I just explained your question. So that's what I'm saying. The issue that we deal with most traders is the fact that we are not patient. So if you're patient, you wait for the full retest. Once you have your full retest, if you place your pending order below the breakout candlesticks, you should be safe. But if the market does go against you under those conditions, and then you know, okay, it happens, but you know that you stuck to the rules that gave you a high probability trade. Do we have any more questions, guys, regarding opening and closing a position? I'm just trying to execute a trade. Okay, there you go. Right, so I just want to make an example here for us. So if we place a buy order here, I don't know why my chart is giving me a bit of trouble today. Okay, okay, no problem. Any questions, guys? Kingfisher says, are there any OctaFX trading restrictions, like hedging, concurrent trading on one market? I don't know if you could break down your question a little bit further in terms of concurrent trades on one market. I did try to log in and log out again. Let's try in again. Okay, did have a chat with the same gentleman earlier on. Wait 1 second. 1 second, guys. I'm just gonna try log in again so I can. But it has been giving me issues. A bit of an issue today. Hey, all right. Let's try again. Okay. There you go. So this is how you execute a trade. You place your either your buy or your sell order. Once you place your buy or sell order, you can then easily drag your stop loss to the area where you expect you stay as a safe stop loss area, and then drag your take profit to your target area. All right. Or you can execute all these options by right clicking and modifying. Once you modify, you can place your stop loss and your take profit. All right. As illustrated over here. Okay. Another option would be if you want to place a sell trade or a buy trade pending order, you then place your buy stop, click on buy stop, then right click, press modify, and then you can place your stop loss and your take profit. So stop loss at, for example, 1,0911, and then take profit at 1,09605. Then you click modify, and then it executes the buy stop and the sell stop. I mean the buy your stop loss and your take profit. Okay, is everything making sense, guys? I hope everything is clear. Does the setup work with all currencies? Yes, the setups that I mentioned to you guys, they work with all currency pairs. Okay. Right. Let's go back to our chart. So we're going to be talking to you guys a bit about risk management a little bit. So remember, guys, we spoke about risk to reward and having a strict and a healthy risk to reward ratio, and making sure that you place a stop loss and a take profit with each of your guys' trades. All right. A good percentage to risk per trade, I would say, in my personal opinion, is 2% per trade. All right. To make sure that you have longevity and you can stick to trading. All right. So once your stop loss, or once your percentage is a bit too high, you can find yourself in trouble when you having to recover and other issues such as that. Okay. So a tool that you guys can use uh, to assist you guys with risk management is forexsignals.com/lots size calculator #use tool. All right. So here you can choose your pair, USD or GBP. Let's say GBP, USD. And then you can put down your entry. Let's find, wait a minute. Okay. Okay, let's say for argument's sake, we're waiting for a buy at this level. All right, 1,24867. So they put that entry is 1,24867. And then we would say our stop loss would be at 1,24601. One. And then we would have our account balance, let's say for argument's sake, is $1,000. And then we choose our currency type USD, and then we risk 2% of our account. And then once you have put all those, your entry, your stop loss, your deposit currency, your instrument, and yeah, then you can press calculate, and then it calculates how much or what lot size you should use. Okay, so 2% of your account would be $18, and your lot size would be 0.07. Right, then you go back here and then you press buy stop. Excuse me, to go up 107, stop 0.07. Then obviously we've got the figures that we had then mentioned. Modify, then we've got our stop loss. Okay. And then we've got our entry, copy it. Okay, now that then we've got our take profit. Our take profit would say 1 comma 25416, and then modify. Boom. Then we've got our stop loss and we've got our take profit area. Does that work for you guys? Okay. Organ Takanipo, you're asking which leverage would I recommend? All these risk, when it comes to risk management, when it comes to leverage, it all depends on your personal risk appetite. If you a person that know that maybe you are a bit ill-disciplined, and by having high leverage, you'd end up blowing your account and things like that, you'd avoid your higher leverage. All right. So obviously, if you're someone that wants to take advantage of higher leverage, and then obviously you would go for higher leverage. So I can't really advise, but yeah, there are all the options are there for you at your disposal, especially with OctaFX. The important thing would just be to back test a strategy, and figure out what works for you, and then eventually figure out what leverage would make more sense for your trading style. Okay. Okay, guys, we have reached the end of our webinar. If you guys have any questions, please don't hesitate. Anything that we have covered in any of our sessions, please just write it in the comment section, and I will do my best to answer you. If you guys, so you usually receive a margin call when you over leverage. Kingfisher. So those aren't issues that we necessarily deal with if you stick to your risk management strategy. If you know you're risking 2% of your account, and before your trade, you know exactly where your stop loss and your take profit is, you don't really worry about such things. Any questions, guys? Very valuable nuggets. Thank you so much, Ian. Thank you so much. Can you do a current market on a live gold chart? Unfortunately, we don't have time for that right now. How's it, Wiz? Can you please explain how the certificate will work? I believe OctaFX will break down all the details for you, but I believe you should receive an email or something of the sort. But if you registered and you are part of all the webinars from webinar 1 to 4, you should receive your certificate of attendance. But I believe OctaFX will respond to you shortly. Is there any way that you could be in contact with me after this webinar? Um, I believe we'll continue having. I think we might have one more webinar. In terms of reaching me directly, you can reach me on my social media platforms. Please, guys, if you could just try to stick to the topics that we covered in our webinars. If you've got any questions regarding what we've covered today, what we've covered in the last 3 webinars, please let's you can ask me any questions. Hi, Rajat. I think we explained liquidity on webinar 2. Please, guys, if you guys have an opportunity, just go over the webinars, webinar 1, 2, and 3, where we cover the basics and the introductory stuff on all the content that we are talking about here. Okay. Yes, 666. There is a certificate of attendance. Please, guys, just go to the web to the description in the bio. Okay, just go to the description in the bio, and you'll find the promo code, and you'll also find the link where you can get yourself 100% trading bonus. Please take full advantage of it. So also when you register there, that was the opportunity that we had to get the certificate of attendance. All right, so the promo will be up from to date until the 12th of April. So please take full advantage, guys. Okay, so when registering, don't forget to use my personal promo code Prince WS. Prince WS. You can just put Prince WS in the comments if you got that promo code Prince WS to get yourself 100% bonus for your deposit. This will help you to maximize your trading experience. Okay, guys. So the promo code is a single used and available until the 12th of April. Okay. Okay, guys. It looks like we don't have any questions. It looks like we don't have any questions regarding. Yes, you can track NFP on www.octafx.com. So just go, as I explained, you can check the news releases on the economic calendar. So as I'd mentioned, once you're here on the main page, you just go to analysis and education. And then you go to Forex news. And then you go to your economic calendar. And then you'll find all the news releases for tomorrow's NFP here. Okay. All right. Thank you so much, guys, for joining today's webinar. And it's been a pleasure. It's been a total pleasure. And once again, don't forget to check the description, to hit the link, and use the promo code PrinceWS to get your 100% bonus with OctaFX. Thank you so much, guys.